Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at Sirius XM Holdings, ticker symbol SIRI, SIRI. We're going to see if the stock deserves to be around $27. We're going to see if institutions and hedge funds are buying the dip. Warren Buffett recently disclosed that he was purchasing this hand over fist, and we'll do some advanced charting to see if we can find any patterns. Look at support and resistances, etc. You can see I did chart this one before. However, the split did affect my patterns, so we'll go ahead and just reset this. 2024, baby. Cool. So we've got a clean slate here. So let's go ahead and jump on in and shrinky dink our heads. Perfect. Okay. So we're looking at the bigger picture here. The stock got as high as around $70, now trading at 27. Has the stock improved since 2019 to 2024? Abso-freaking-lutely. So definitely looks like we've got an undervalued stock here. Looking at the strength, it is with the bears. However, we can see this is notched up here. Our momentum does indicate that this is likely turning around. So this could be our potential bottom here. Money flow looks like money is exiting the stock. However, FinViz is not as updated as Fintel, which is right here. So we'll see what the most up-to-date data says. And our relative momentum indicator is scraping the bottom of the ocean. We'll see what happens over the next few weeks, but in the meantime, we're going to determine if this company is worth 27 or more or less. So before we dive on in, okay, so we see that the stock is very undervalued here. However, a red flag, and I don't know if Warren probably is aware of this, but quick ratio of 0.43, meaning if they closed their doors tomorrow, they would not be able to pay off all their debts or liabilities. So that is a concern. We don't have any debt showing here, so we're going to have to dig a little deeper down. Sales past 5 years, positive. EPS past 5 years, also positive. That does show signs of resiliency. Gross margins, 42%. That is very indicative of a high growth company. They are profitable. A lot of shares outstanding. I'm getting mixed signals on this one personally. Looking at here, EPS up and to the right overall, that is good. Our sales, 2022 was our record year at 9 billion in sales. 2023, 8.95 billion. 2024 now, we're at 8.9 billion in sales. Not as much as 2023. Again, this is trailing 12 months. So we need a little surprise beat for the next 2 quarters here. Actually, they have earnings coming out literally tomorrow morning. That's fantastic. We'll see how my analysis goes. And our shares outstanding here, again, we see natural and organic accumulation. You could see 441 million shares were existing in 2019. Fast forward 2023, 2024 now, we're at 384 million. So there is some natural and organic accumulation, which is a good sign. We're going to run our handy dandy calculation to see what the potential stock price could be. So we have a market cap of 9 billion at 360 million. Income, again, profitable, 1 billion at 300 million. And sales is 8 billion 900 million. I just noticed this, they do pay a dividend, which I'm questioning this because why aren't they using that money to strengthen their leverage positions? I'm a little bit baffled by that, unless there are some talks and strategies underway that we can't see here at face value. So that's my question/concern there. Very interesting. On we go. Okay, really quickly, Q1 2024, they brought in 2.1 billion. Q1 2023, they brought in 2.14 billion. So a slight increase. However, gross profit was only up 1 million. year over year. Not good. Q2 2024, they did 2.17 billion. Q2 2023, they did 2.25 billion. However, they spent a little bit less, and their gross profit was $27 million less than the year before. Mm, Warren, okay, we'll just keep going on. Uh, Net income for Q1 2024 this year was 265 million. Okay, they're getting more efficient. Net income for Q1 2023 last year was 233 million. So that's a $32 million positive increase. So slight efficiency. Okay, here we go. Another slight efficiency. Net income 316 million for Q2 2024. Q2 2023 they were at 310 million. So a $6 million efficiency. So they're becoming a little bit more efficient actually. At a deeper level, they are becoming more efficient. That is very good news. Another efficiency. Their earnings per share on a recurring basis. Again, 2024, Q1 2024, 0.73. Q1 2023 is 0.65. That is an increase of 0.08. Again, that's better. That's efficiency. And again, Q2 2024, 0.85. Q2 2023, 0.83. 0.02 boost of efficiency there. Gross margins around 42 mil or 42%, 41%, 43, 43, 42, 41, 44, 44. So hovering around the 41 to 43 range on average. Okay. No real red flags here. I'm actually sensing some efficiencies. So let's continue on. Cash, they have $100 million. Debt, now this is what I'm concerned. $9 billion in debt. This is probably gonna, that's insane. Get out of here. Get out of here. Scram. Okay. Debt, 9,340,000,000. That is crushing. Okay. Total assets, 11.1 billion. Total liabilities, 13.2 billion. What the heck is Warren thinking here? When liabilities exceed assets, uh, that starts with a B. That's bank. That's like that's bank. That puts company into when a company's liabilities exceed its assets, the company is considered insolvent. What the heck is going on? I am baffled. So they really don't have any margin of error here. They have to run. Why are they paying a dividend? Seriously, are they still paying the dividend? They are. What the heck? I'm baffled. What is, are you like, what? The positive takeaway here, there is a positive, and I don't know if Warren sees this at a deeper level, but I'm guessing hopefully so. Q1 2024 assets were 11,174,000,000. Q2 assets increased 11 million. Now looking at liabilities, liabilities decreased about 256 million. So maybe they found their rhythm where they can increase assets, decrease liabilities, but this is still something I would stay far away from for now. We can see Berkshire Hathaway just going bananas here. Um, yeah. I'm just look at he's bought in almost 100 million, 3, 6, 7, 8. No, he's bought in over $100 million worth. That is insane. And it's because he's betting that they've figured out the secret sauce to get their total assets to grow while total liabilities decrease. Is that what Warren is into? Debt increased, but total liabilities decreased. This, I mean, other than Warren Buffett buying, I don't see this is kind of a wait and see here, honestly. Let's continue on with our calculation here. We got total shares outstanding 384,300,000. So we're getting a stock price of $26.85. And they're also giving their cash away right here. My calculation doesn't count. So this should actually be less. I don't know about this one, Warren. Utterly confused. Institutions own 12.7%. That is old data. New data suggests that they own. Okay, we're going to have to do manual calculation here. Please hold while we do this. Okay. Again, it's 120,114,053 shares. And we're going to take that and divide it by 384,300,000. So institutions actually own 31%, which is fine. I mean, you've got Warren Buffett buying the freaking boat. We should see Berkshire. Yeah, Warren Buffett. What is he do? Liberty Media sells 3.2 billion shares. John Malone purchases 22 million shares. Is John Malone? Let's go down here really quick. John Malone's not even the CEO. What the heck is going on here? I don't know about this one, man. And then you got all these people following Warren Buffett. Man, do they know that the liabilities exceed the assets here and they're paying a dividend? That's a gross miscarriage of corporate funds, really. I mean, good gravy. Let's just go down here really quick. I don't see the quick ratio. I want to see what's going on. Do they have a quick? Yes. Quick ratio. I swear I saw a quick ratio. Where did it go? I seriously. It's not going to be here, is it? Here it is. Their quick ratio has sucked for so long. So if they were to close their doors tomorrow, they would be screwed. I don't get the appeal to this stock, honestly. I'm sorry. This is a wait and see at the moment. Who cares if they have earnings tomorrow? I'm kind of shocked. Okay, let's do some advanced charting here. 52 cents. All-time high is gonna be here. Okay, we are seeing some respect of the candles. Test here. Let's see what we get. I like this. So let's move this one. I just want to remove this drawing. So the reason I like the Fibonacci arcs is because if we can find the right the right cycle low to the right cycle high, we can now look at the cycle high to the potential cycle low. And the way we can determine how confident we are in this, do I feel confident on this? Would I put money on this? Does this bring me positive feelings? So we're going from our cycle low here. This was 2016. Look at how these candles are this like beautiful supports here, 10 out of 10. Perfect resistance, perfect test, perfect resistance test, or perfect support, sorry, perfect supports here. Extremely accurate, 10 out of 10 test up here of the ring. 10 out of 10 resistances, 10 out of 10 support test here. Again, 10 out of 10 tests of resistance there. 10 out of 10 support test here. 10 out of 10 support rest right there. Extremely beautiful supports here. Again, perfect supports, perfect resistances falling through, perfect resistance coming up. This candle testing our inner ring, and it's crazy. Perfect resistances, breaks through, perfect support, perfect resistance. So the reason I went through all that candle review, because now we can go from here and find our potential all-time low. So here is our potential candle for all-time low. This is where we've seen a lot of buying from Warren Buffett. This does seem like an accurate candle to be our all-time low or our all-time cycle low from our all-time high to our all-time low, because we're going to make it a different color so everyone is on the same Larry page. Okay, we're looking at the perps now. Let's pay attention to the purple lines. Candle 10 out of 10 resistance here. Great test of resistance. Comes and falls through. Falls 10 out of 10 support on the purple here. 10 out of 10 resistance on the purple. 10 out of 10 test of resistance. Breaks through. 10 out of 10 resistance here. Test on the purple. Perfect purple test. Perfect purple test. 10 out of 10 test of resistance. 10 out of 10 test of resistance. Great test here. So this could be our Fibonacci cycle low. Although I don't agree with it, there has been significant volume here that would indicate this could be our low. Now, if this is not our low, I think I'm just not convinced, honestly, based off of the liabilities, the assets. They're paying a dividend. Their quick ratio is horrible. Honestly, I think a good test of support. Uh, okay, my calculation said it was worth $26. Its stock is 27. Um, but again, the dividend, they're giving money away, which what the hell are they doing that for? So here is a good potential bottom. Here's another really good one. Okay, now if the stock gets to this level, which is a good level of support, in my opinion, let's go from our all-time high cycle here to, let's say the stock goes, I would say probably like right there. This is beautiful right there. I mean, that's a 50% drop almost. It would have to drop 50%. Um, and we've seen it drop from 70s down to now 27. So it's already dropped over 50%. Um, yeah, I'm not convinced with this one, guys. I'm sorry. You let me know what you think. So we've got our potential low of $14. Uh, I'll just go ahead and remove this because, well, I don't want to remove it, but I don't want it to be so ugly. I'm trying to make it less or more transparent here. So it kind of blends in. Okay, so it kind of blends in a little bit better. So a potential high, if you are going to trade this stock, um, the first area you're going to want to watch for is right here for shizzle. Well, let's go here. What's going on? Okay. That's test one, and then test two is probably right. Yeah, right here. Okay. So if you're trading this, we're gonna watch for $29 to the upside and then 33. But like I said, I am not convinced. So yeah. And then just doing some more chatting. I mean, this is in a deep wedge. So what do we need to see here? This is what we need to see exactly from Sirius XM tomorrow morning. We need to see. Uh, Coffee. Okay, we need to see 2.2 billion. No, we need $2.3 billion tomorrow morning in revenue. 2.3 billion in revenue. EPS, we need. Ooh, ooh, that's going to be a tall order. We need EPS, earnings per share, to be a 96, 97 cents to a dollar per share. That's a tough order to ask, man. These next two quarters for Sirius XM are going to be, they need to be record quarters. They need 2.3 billion in revenue with EPS around 96, 97 to a dollar. I mean, with all these people who follow Warren Buffett, I'm sure they've maybe activated some Sirius XM subscriptions to help with the stock that they own to see a return. But good gravy, baby. Let's see. Good gravy, baby. Trailing 12 months, 8.9. Yeah, so they need some good juju. And when I say good juju, they need 2.3 billion in revenue and they need a dollar EPS. That will get this to 20 or to $33 and likely a bottom. This would be considered our bottom here. If they do not, I see this still continuing to go lower. And again, Warren Buffett's someone who plays the long game, so he's buying as the stock continues to go down. That's the same with me usually. Um, you want to buy a stock when it goes on sale. We also need to watch that their liabilities decrease, assets increase. If they don't do that, this company, I don't know what the heck they're doing. Maybe they need to do some layoffs because they need to trim the fat, honestly. They have 5,680 employees. They need to stop paying the dividend. I think they need to stop paying the dividend for a year, put that money back into their pocket, get their quick ratio back in line, get their assets to a good level, get their liabilities down. I mean, come the heck on. For a company that does a subscription-based model, what is Warren doing, man? I don't know, but he's the goat, so you gotta respect the goat. Anyway, I am definitely not buying this one. I'm on the sides. Let me know what you guys think. Uh, have a good day. Good luck if you're in this one. I don't want anybody to lose any money ever. So if this helps you, uh, cheers. Adios.